Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. We'll be discussing exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. So if you enjoyed today's video, make sure you hit that thumbs up button. And if you aren't already, make sure that you subscribe to the channel so you can stay up to date with all of our latest videos. All right, now let's get right into this morning's exciting stock market news. U.S. stock futures are well in the green this morning, with the Dow futures being up 0.53%, S&P 500 being up 0.5%, and NASDAQ futures up 0.57%. The Fed is set to release its results of their annual stress tests for the U.S.'s largest banks after close today. Banks are expected to pass with flying colors, and if all goes as expected, those successful results could mean the Fed would ease up on some of the restrictions on dividends and buybacks previously placed. Electronic Arts, or EA Games, has reached a deal worth $1.4 billion with AT&T and Warner Media to acquire their mobile game studio, Playdemic. The acquisition aligns with the company's sports mobile growth strategy focused on delivering exciting experiences to 500 million players worldwide. Playdemic will be a significant addition, expected to bolster the EA's portfolio of offerings in some of the fastest growing genres. The Warner Media unit is best known for the award-winning game Golf Clash, which has witnessed over 80 million downloads and clinched some of the biggest industry awards. Analysts rate the EA stock a moderate buy with an average upside potential just shy of 18%. Digital banking and lending company QTWO Holdings has announced a collaboration with Bitcoin technology company NYDIG. This will help 18.3 million registered users of the QTWO platform to buy, sell, and hold Bitcoin. The move will help QTWO take advantage of NYDIG's secure, regulated Bitcoin platform and offer a seamless Bitcoin transaction experience to its institutional clients. QTWO's EVP said that we are excited to work with NYDIG to enable financial institutions to take advantage of this market opportunity and meet the demand of their account holders. Their stock is rated a strong buy by analysts with an average upside potential of 22%. One of the world's largest cannabis companies, Canopy Growth, completed their acquisition of the Supreme Cannabis Company on Wednesday. The acquisition of Supreme further strengthens Canopy's global leadership position in the Canadian recreational market and creates a pro forma market share for the fourth quarter of fiscal 2021 of 18.1%. In addition, the acquisition creates an immediate value creation opportunity, with synergies estimated at $30 million Canadian to be seized over the next 2 years. Analysts are a bit more divided on this stock. It does come in with a hold rating, with price targets ranging from $21 all the way up to $51, coming in with an average upside of 21%. Medical Properties Trust has agreed to acquire 5 hospitals from Tenet Healthcare worth about $900 million. Medical Properties Trust is a self-advised real estate investment trust focused on hospital facilities. The acquired properties will be leased to Steward Healthcare System. Along with improving portfolio diversification, the transaction is expected to be immediately accretive to Medical Properties' bottom line. The company now has 444 facilities and about 47,000 licensed beds in 9 countries within its portfolio. Their stock is rated a moderate buy with an average upside potential just over 18%. Now let's take a look at some recent notable earnings reports. Starting off with Patterson Companies, whose shares did drop nearly 12% after some disappointing Q4 results. Patterson, who is a provider of dental and animal health supplies, reported disappointing earnings for their fourth quarter. Their reasons included, of course, the COVID-related closures of dental practices and a slowdown in demand for non-essential pet-related services. The company reported Q4 adjusted earnings of 38 cents per share, which was down 11.6% year over year, and missed analyst estimates of 51 cents per share. Their net sales for the quarter climbed 21% to $1.56 billion, which did beat the street's estimates of $1.52 billion. Analysts do rate their stock a moderate buy with an average upside of 22%. We also heard from grocery store owner Empire, whose shares also dropped about 5.5% after they reported lower profit and sales in their fourth quarter. Empire, who owns the grocery chains Sobeys, Safeway, and Freshco, had their sales come in at 6.9 million Canadian, which was a decrease of 1.3% from the prior year quarter. Meanwhile, their net income amounted to $171.9 million, or 64 cents per share, compared to $177.8 million, or 66 cents per share in the same quarter a year ago. On a positive note, the company did increase its quarterly dividend by over 15%, up to 15 cents Canadian per share. Analysts do rate the stock a moderate buy with an average upside just shy of 14%. However, we haven't seen any price targets reiterated since the earnings report. Other earnings reports expected this morning are from Rite Aid and Carnival, and in the after hour, we'll be hearing from FedEx, BlackBerry, and Nike. Now, let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Marin Software Incorporated. Trading under the ticker MRIN, they're currently up 63% in the pre-market after announcing an integration with Instacart ads. They are followed by India Globalization Capital under IGC, who's up 23.6% after announcing trial updates on their Alzheimer's patients, and Aravive Incorporated under ARAV. They're also up 23% after positive results from their kidney cancer treatment trial. Our biggest losers this morning include Fulcrum Therapeutics. Trading under the ticker FULC, they're down just over 11% after missing a primary endpoint for one of their trials, followed by Daqo New Energy under DQ, who's down nearly 10% after it was announced that the US would be blocking some solar products from certain Chinese regions. And Rite Aid under RAD. They're currently down nearly 6.5% as their earnings report did come out while we were filming, and they did beat on the earnings per share, but missed on revenue. So that is everything for Thursday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you enjoyed today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. And for other great stock-related content, make sure to check out the TipRanks Instagram at TipRanks for Investors. Thank you guys so much for watching. I hope you have a wonderful day, and I will see you back here next time.